It's a big week in the market. We've got Mag 7 earnings and also memory stocks are reporting Thursday after the close. I think that's going to be a big momentum tell for the market. But let's just jump right in, guys. I have a lot I want to share with you and cover today. I want to talk about the government shutdown that is apparently coming. So I pulled a bunch of data and made this chart here. We're going to see a lot of headlines if the government shutdown is to happen. Everyone's going to start calling top again. Okay, well, look, I'm a data guy. Okay, I'm not a headlines guy. The data shows that historically, this is each one of the government shutdowns since the 1980s. I typically don't like to pull much data beyond 1971 specifically. That's when the market's changed, okay? And for me, I like to pull data since that. I just think it's a bit more relevant. Anyways, guys, we have each government shutdown since 1981, and the blue bar is the price percentage up or down 3 days, 3 weeks, and 3 months later. And then these sideways horizontal dotted lines is the cumulative average of all that. Okay. So when people are saying that the market's going to crash because the government's shutting down, I say why? Because the data says that typically on average we're higher 3 days, 3 weeks, and 3 months later. So I don't stop trying to guess and predict. Having this data also doesn't mean that I'm going to guess or predict and be like, oh, we're shut down, I'm going to go long. No, I'm going to wait and see. And when we break out of the churn of the market and confirm, I'll take it. Okay. But this is one of those things where I promise you're going to see people talking about the top of the market this week. And yeah, that might happen, but you don't know. And saying the top of the market comes from government shutdowns or market crashes come from government shutdowns, that person is incorrect. That's just a fact. It's a statistical fact that person is incorrect. Unfollow them. Okay. And then the other thing I want to look at is we have that conflict in Iran, that possible conflict. Okay. Same exact thing for major geopolitical conflicts that I pulled all of the data for you here. People are going to say the market crashes because the war happens or a war is going to happen and World War III, all this stuff. Typically the markets are higher 3 days, 3 months. On average, the markets are higher 3 days, 3 weeks, and 3 months after the announcement of major conflicts. Okay. Data, guys. All right. Do not listen to the headlines this week. If either of those things are to happen, wait for structure and confirmation.